Dear old work platform, it's not you, it's us. Actually, it is you. Endless onboarding? Constant IT bottlenecks? We've had enough. We need a platform that just gets us. And to be honest, we've met someone new. They're called Monday.com, and it was love at first onboarding. Their beautiful dashboards, their customizable workflows got us floating on a digital cloud 9. So no hard feelings, but we're moving on. Monday.com, the first work platform you'll love to use.
I'm no tech genius, but I knew if I wanted my business to crush it, I needed a website now. Thankfully, Bluehost made it easy. I customized, optimized, and monetized everything exactly how I wanted with AI. In minutes, my site was up. I couldn't believe it. The search engine tools even helped me get more site visitors. Whatever your passion project is, you can set it up with Bluehost. With their 30-day money-back guarantee, what have you got to lose? Head to Bluehost.com to start now.
Welcome to another episode of Investies. I'm your host, Linda Garcia. This week on the podcast, we are going to discuss the stock market's new record-breaking all-time high, followed by the worst day of the year. But before we get into that, I want to share with you a few updates on how my journey is going with legislation in Austin, and also an update on when our episodes are going to be released. As you know, I have been in the thick of the transition of living in Austin part-time, transitioning into becoming a legislator. Having to leave my family part-time has been obviously extremely challenging, most especially as a mother to an 8-year-old son. He has been needing extra cuddles lately, and honestly, so have I. We have come to the time and space where I am no longer able to record on Wednesdays. My calendar lately has been full from the time I wake up until 10 p.m. at night. And so because of this, we are going to make some recording adjustments to our schedule. And honestly, I think, and the team thinks, that this will be a better release date for you all, as it will give me time to gather the full scope of what took place in the market for an entire week versus half of the week. And you will have an update on, it looks like, Tuesdays. Tuesdays are going to be our new publishing date. And as mentioned, you will have a full comprehensive update on what took place the week prior. So this will be a nice space to be in, as it will set you up early on in the week and hopefully inspire you to take a look at your portfolio, make any changes necessary, or do what we know how to do best and just sit tight and practice patience. I also wanted to share that in the Texas House, legislators have now received committee assignments. I want to break down with you what committee assignments are and also what committees I got chosen for. Legislators are broken up into small groups, and these groups are known as committees. In those committees, we focus on different topics like education, health, or finance. There are currently 34 committees in the House, and in those committees, we will review, amend, and debate proposed laws before they go to full legislation. Committees help ensure that bills are thoroughly vetted and often hold public hearings that you are able to witness on our Texas House website. As legislators, we get to request what committees we want to be on. Those requests are dependent on multiple variables, and we are not guaranteed our requests, most especially if we are freshmen. The request is in your favor based on seniority and also based on whether or not you voted for the speaker that got selected. The reasons why legislators pick specific committees obviously varies from legislator to legislator. I can't speak for anyone else. I'm just going to share my personal experience and why I chose the committees I chose. I am going to serve on the Pensions, Investments, and Financial Services Committee, also known as PIFs, and the Delivery of Government Efficiency, also known as DOGE. Picking these two committees for myself was something that was an isolated decision, meaning I made it by myself. And it was also a decision that obviously I felt I was most closely aligned with based on my experience and my expertise. Pensions, investments, and financial services is obvious given my experience and my background. Delivery of government efficiency might not be as obvious, and also it has so much hype right now because of what is taking place on a federal level. It's really important for me to explain that the DOGE, which is Department of Government Efficiency, different than the Delivery of Government Efficiency for the state of Texas, is different than what will be taking place here in Texas. And one of the biggest differences is that we are all elected officials and that a committee like this already existed called the Sunset Committee, which was a committee that was dedicated to reviewing Texas state agencies and making sure that they were running as efficiently as possible. Now, that committee would make cuts every 12 years, from my understanding, and the Delivery of Government Efficiency Committee in the state of Texas is going to review state agencies much more often. Now, on top of this, what this committee is also going to be focused on is AI and technology, as well as cybersecurity. So any bills pertaining to AI and technology and cybersecurity will also be moving through the Texas DOGE committee. And this is the main reason why I chose DOGE to be one of the committees that I wanted to serve on. In the last 12 years that I have been a student of the stock market and investing in the stock market, I have only invested in technology companies. So for the last 12 years, I have been studying technology companies, and along with studying technology companies, by default, you are also studying technology. So this was a very easy choice for me to make based on my experience. It is an absolute honor to be able to contribute to two committees that I am most closely aligned with, where my passion lies, and I feel like I can contribute to the most, not just for my constituents and families across the state of Texas, but also for my colleagues. We are not all able to be experienced in all of the different types of committees that are in the House. And so it is important for our party to have experts in all of the multiple committees that we have, so that we can not only know how to vote on bills or know how to question or amend the bills that are coming through the House, but also help educate our colleagues on the topic. We have colleagues that specialize in criminal justice. We have colleagues that specialize in higher education. And so colleagues in different areas can then come and educate me on how I need to vote or where I need to be pushing back. While we as legislators pledge our commitment to doing our due diligence on all of the bills that are filed, it's important for us to understand that, for example, in 2023, 11,807 bills were filed, and we literally have 140 days to move through all of those bills. And so it is impossible for any one person to become an expert in the space. This is why trust amongst colleagues and diversity on background and experience is extremely critical. The last thing I want to say pertaining to this topic before we get into the stock market updates and inflation updates is that I am not only grateful to be able to serve on these two committees, but I am also very excited and I feel in complete alignment. Every step of this process, making the decision to do this, going through the entire process that it requires for an entire year, has brought me to the place and time where all of this makes sense for me personally in my vision. I am in my true North Star. I feel very positive about this decision and, again, what I can contribute. And more importantly, as a mother to an 8-year-old and as someone that is having to uproot themselves, I am in complete peace. It doesn't mean that these decisions are easy. They're not. I'm human. I'm a mother. I am a partner. I also contribute to running a household, and having to give up some of those parts of me is a challenge, but I am giving them up to a space in which I want and desire to be in. I have been wanting to contribute to this space on a much more official level for years now. And if you have been listening to my work, you already know that I have been wanting to contribute to the space politically. And so here we are in complete alignment. And yes, mothers sacrifice a lot to go to work and be separated from their children, however that may look like for mothers on an individual level, whether it's 9 to 5 or whether it's having to travel for work, or whether it's like me and having to live part-time in another place. But I am in my North Star. And for me personally, I wouldn't want this any other way. And so the challenges that come with this separation, for me personally, are worth it. I want to give a huge shout out to our working mothers and also to our mothers that are involved in their communities, whether it is volunteering or whether it is in policy. Just a big shout out, because it is important for us to also hear mothers' perspective, not just mothers with older children that may be adults, but mothers with young children, because I do think that that contributes to a very important perspective that often gets overlooked because we are so busy mothering and hardly ever get opportunities to make these types of contributions to our country. And mothers need representation too.
From ADT comes Trusted Neighbor, the new standard in home access. Through the ADT Plus app, easily grant and automate event-based or scheduled access for neighbors, friends, and helpers. Notify trusted individuals of events like alarms or packages, and set access windows for planned guests or even the dog walker without interrupting your day. Visit ADT.com. When every second counts, count on ADT. Requires ADT Complete Pro monitoring plan and compatible devices. Copyright 2025 ADT LLC. All rights reserved.
Average is not invited. Not if you're holding your company off-site in Las Vegas. We aren't on friendly terms with the bare minimum, and unenthusiastic is uninvited. Las Vegas's creative energy and world-class hospitality want to bring your company off-site to crazy new heights. That's why fear-based leadership is afraid of Vegas, and boring won't be there, but it will be watching the meeting recordings later. Plan for the extraordinary at vegasmeansbusiness.com.
All right, Investies, let's get into the stock market. Last week was a really volatile week. Obviously, we're going to continue to see volatility as the conversation on tariffs unfolds. The market is picking up on a trend with Donald Trump, where he begins to talk about any potential tariff increases on the weekends. It is my personal belief that he does this strategically on purpose because the stock market is closed and can't have an immediate reaction. We'll be sure to link in our show notes the episode where we talked about Donald Trump market manipulation. Also, we know that the stock market is very important to Trump, and he measures the overall economy with how the stock market is performing. This, of course, is an obvious perspective to have when most of your billionaire friends and those that have donated to your campaign are also impacted tremendously by the stock market. So it's no surprise to me that he uses weekends to talk about these topics that can cause a lot of volatility in the market. It does provide a cushion. It does provide time for the market to process. If he were to be talking about these anticipated tariffs that will impact the market during market hours when the market is actually open, this can cause a severe negative impact. And when the market starts to decline at a rapid rate, what happens is that the velocity of that can potentially increase. And that is where the market starts to overreact. In anticipation for potential dialogue, it looks like the market has picked up on the trend. It always will. It is the master of picking up on trends and patterns, and we saw a steep sell-off last Friday. Let's get into it. So, last week, the stock market reaches a new all-time high on Wednesday. Could this potentially be the end of the market trading sideways, the end of consolidation? No. On Thursday and Friday, the market begins a steep sell-off. We did get new inflation data the week before. The market, as I just mentioned, it tends to react right away. It won't react 6, 7, 8 trading days later on a report. So I do not attribute the stock market decline to the latest inflation data that we received. We are going to discuss the inflation data, but I just want to make it clear that the sell-off we saw on Thursday and last Friday is pertaining to tariffs and the potential fear that is taking place. This, I believe, was stoked by Walmart earnings call. Now, you all know on this podcast, we review how Walmart performs during earnings and how Target performs during earnings because these two stores give us a strong indicator on how consumers are doing with inflation. Walmart reported last week, and Target is not reporting until 2 weeks from now. So I'm not going to get too much into the conversation. What I do want to say is that Walmart actually reported strong earnings, relatively strong in terms of beating earnings expectations, meaning that analysts had determined a certain earnings per share and a certain amount of revenue, and they beat what the analysts expected. Typically, when this happens, we see positive growth for the publicly traded company in the market. However, this time we saw a sell-off. When Walmart's chief financial officer, John David Rainey, was asked on how tariffs would impact Walmart, his response was Walmart is not going to be completely immune. And the market hung on to that statement. He did follow it up by saying we've lived in a tariff environment for the last 7 or 8 years, and we'll do what we know how to do. We'll work with suppliers, we'll lean into our private brand, we'll shift supply where necessary to take advantage of lower costs that we can then pass on to consumers. Walmart stock immediately began to sell off. We saw a drop in the stock of 9.78%. This is a very steep drop. Anything over 10% is considered correction territory. Anything past 20% is considered a crash. But to have almost 10% happen in one day, it means that the market is reading into something that can potentially be more serious. It did not matter to the market that they had a strategy in position. What mattered to the market was the statement that Walmart is not going to be completely immune. What this tells us is that the United States of America is not going to be completely immune. If Walmart is impacted, it can potentially signal that the country can also be impacted. What has taken place with Walmart in the last couple of years is important for us to understand. Walmart has taken customers away from stores like Target. It has taken away high-end shoppers, which tells us that they are using Walmart to adjust any increases that they have experienced because of inflation. So it's really important for us to understand that the market isn't necessarily reacting to Walmart specifically as a store. It is reacting to the potential for consumers across the United States. This then kicked off a sell-off in the market. When we have earnings calls, there are three things that are very important to earnings calls. Top three things to look for. Obviously, there's a multitude of things that we can deep dive into, but the market wants to know, how did you do in comparison to an analyst that analyzed your company? Did you beat earnings per share against what the analysts expected you to generate? Did you beat revenue against what the analysts expected you to generate? And what is your forward outlook? Meaning, how do you see the company performing in the future? And what we heard was that tariffs are a concern and that Walmart would not be immune. I do realize that this all sounds very alarming and like we should all be panicking at this time and what's going to happen, the sky is falling. And I really just want to give you a sense of how the market reacted and why it's reacting this way. We had an all-time high on Wednesday in the S&P 500, and then we saw the market completely deteriorate on Thursday and on Friday. It continues to anticipate the potential damage that can happen because of tariffs. Now, with that being said, it is going to be extremely important for us as investors to understand that these are opportunities for us. This isn't a time for us to panic and freak out. This is a time for us to continue to build our portfolio and maintain a position, which means if we currently have the extra income to continue to purchase shares and lower our cost basis, then we should do so. The market turning negative is always an opportunity for us. Now let's get into the inflation data that we received earlier this month. Consumer Price Index, also known as CPI, increased. CPI measures the change in prices paid for goods and services over a period of time. This is a strong indicator that is used to measure inflation that is experienced by consumers, which is us. So it measures how much the prices on our services and products have increased over time. When we get inflation data, it is not pertaining to the month that we are currently in, but it is pertaining to the previous month. So in the month of January, we actually saw an increase in consumer price index of 0.5%. So inflation increased by 0.5%. This is 0.1% higher than what it was in December. So it is telling us that inflation continues to increase. Year over year, CPI came in at 3%. Our annual target is 2%. This is what the Fed is working really hard to lower. We are still at 3%. So that tells us that inflation continues to be what we call in the industry as sticky, meaning it is not normalizing. It continues to increase and therefore continues to be a problem. Now, this wasn't as detrimental to the market. It didn't have a strong reaction. The following week, as we know, we saw a new all-time high. And so that tells us that the market wasn't too surprised by the data that was released. We also received PPI data, which is Producer Price Index. PPI measures the cost of producing goods and services. So if the cost to produce something increases, a retailer then takes on that increase, and it is then eventually passed down to us, and we see it as consumers in the CPI data. So we did see wholesale prices higher than expected from analysts. The actual increase was 0.4%. Analysts were expecting 0.3%. However, the positive news here is that in the previous month, in December, we increased by 0.5%. So we did see a 0.1% decrease from December to January. On a year-over-year basis, PPI has increased 3.5%. Again, we are aiming for 2% on an annual basis, so this is still a lot higher than what we are aiming for. All of this data is just telling us what we already know, which is inflation continues to impact us. Investies, you already know what time it is. When the stock market goes down, we lean in or we simply remain patient. You're listening to Investies, a Cosmic Standard and In Luz We Trust production. A special thank you to the team, Asia Simpson, Eliza Smith, and Jacob Winnick.
You're a startup founder. Finding product market fit is probably your number one priority. But to land bigger customers, you also need security compliance. Obtaining your SOC 2 or ISO 27001 certification can open those big doors, but they take time and energy, pulling you away from building and shipping. That's where Vanta comes in. Vanta is the all-in-one compliance solution helping startups get audit ready and build a strong security foundation quickly and painlessly. Vanta automates the manual security tasks that slow you down, helping you streamline your audit. The platform connects you with trusted experts to build your program, auditors to get you through audits quickly, and a marketplace for essentials like pen testing. So whether you're closing your first deal or gearing up for growth, Vanta makes compliance easy. Join over 8,000 companies, including Y Combinator and Techstar startups who trust Vanta. For a limited time, get $1,000 off Vanta at vanta.com/simplify. That's VANTA.com/simplify for $1,000 off.